Welcome to the daily briefing from interest.co.nz. I'm David Chaston. Today the latest trade balance data is released. We review the latest measures of consumer confidence, introduce a look at the oil price as a marker for risk and uncertainty, and we'll wrap up with what the other media are reporting. The trade balance data out today for August has some startling detail. August exports were down 2.7% when compared with the same month a year earlier, and a closer look at the usual big commodity components shows that dairy and meat commodities were the main reason. Prices might have been higher this year, but the volumes were quite a bit lower. However, the situation would have been a lot worse if it were not for a big increase in exports of, wait for it, crude oil. Yes, our exports of crude oil helped limit this fall in food exports. August 2007 saw the first full month of production from the Tui oil field, contributing to the highest recorded value of crude oil exports in any month. The monthly trade balance in August 2007 was a deficit of $945 million, the second biggest on record. All August months have been in deficit over the last decade, the last four the largest, with the average deficit over the last 10-year period of $570 million. Today, two complementary views on consumer confidence were released. We got the latest data from both the twice-a-month Roy Morgan survey and the quarterly Westpac survey, and they both show similar trends, as you might expect. Awareness of the massive income boost set to come to dairy farmers and the buoyant labour market are helping to lift consumer spirits, said Westpac. Consumers nationwide recognise the huge benefits the current terms of trade boost will have to the wider economy. Changes like this, which are probably long-term, are being reinforced by a strong demographic shift, which means that we are now likely to have low growth in our working-age population for decades to come, and that means longer-term labour shortages. In turn, that means aggressive competition for workers and rising real wages. Relatively high consumer confidence levels are likely to be around for a long time. But the month-to-month outlook is where the interest will focus, especially as we get closer to next year's general election. Yesterday we introduced a view of the gold price as a marker for risk and uncertainty in the global outlook. Overnight, London gold closed at $728.50 US, historically high but off slightly from its Friday's record close. Another view which we want to introduce to you is the oil price. The general media focuses on the spot crude price, and that jumps around quite a bit. It's also at historically high levels. But of course, no self-respecting oil company buys crude at the spot price. They buy on forward contracts, and it is this forward price that has the direct impact on our pump prices. One benchmark that is important for New Zealand petrol prices is the 1 month forward contract price for Dubai crude. It is the price we monitor. And like the gold price, in US dollars, it is a good marker for risk and uncertainty. When we add in the exchange rate effect, given the oil price in New Zealand dollars, you can see that our high exchange rate has tended to insulate us over the past year or so from the sharp ends of the consequences of that global rise in risk and uncertainty. And finally today, a quick wrap up of some other recent news. US bond traders, who predicted 6 of the last 7 recessions, say the Federal Reserve will lower interest rates again before the end of the year as their economy slows. The US economy needs to grow at 2.5% to 3% or else it stalls, said the highly respected boss of PIMCO, manager of the world's biggest bond fund. In contrast, New Zealand would regard 2.5% to 3% as relatively fast. In an announcement that is sure to spark more debate on the brain drain from New Zealand, Australia has announced that New Zealand has overtaken Britain as the largest source country for permanent migrants to Australia. Christchurch-based Property Finance Group has had its share trading suspension lifted by the NZX, but faces a new pressure. It must find the funds to pay its preference share dividend by the end of the month, or go into default again. You can get more news and stay up with Newsmaker Views on our news page. Join us again tomorrow for the freshest finance news on the web. We'll see you then.